Hey there, and welcome to another segment of Coffee Talk. Joining us today is Beth Fitch, founder, partner at Rig-I Fitch Law Group. With over 32 years of civil defense experience, Beth counsels accounting firms and other professional service firms on cyber liability and insurance issues, data privacy, cyber risk management, and risk transfer strategies, and cybersecurity best practices. Welcome, Beth. We are honored to have you and join us for Coffee Talk today.
Great to be here.
Let's dive a little deeper into cyber insurance. It's a complicated topic. There's been a lot of movement in this area. A lot of companies have dropped out. A lot of insurance carriers have dropped out of cyber insurance. You started to touch on that. And what kind of cyber security insurances cases are you seeing? I mean, what are the most common issues? It's complicated stuff. First person, third person, negotiating.
Right. Exactly. It is complicated. So the first party versus third party. And so typically what I hear from a insured's viewpoint is they're worried about lawsuits and third party, but in cyber, and that is important if you're talking about an errors or omissions policy. That is important if you're talking about a commercial general liability policy, which you have to have. But what's really important is first party coverage, because that's where your expenses are going to be. That's where it can put you under more than third party. And so really understanding what are the coverages for first party. And it is fraught with risk and it is complicated. And the most complicated part about it is even from year to year within a particular insurer's own policy, they change radically. The language changes, the coverage changes. Whereas if you have an auto policy, you can pretty much look at any policy and it's going to be very similar. Not true from carrier to carrier. They don't have standardized policies. And within the carrier itself, as the evolution of risk changes, so does the coverages. And so you can't just rely on what worked last year is going to work this year, because first of all, the threats change, the insurance policies change, and the coverages really change. And so what was available last year is no longer available this year. What you could get coverage for at a significant high policy limit now costs too much. So do you need to look at sublimits, and what are those sublimits? So, I mean, just to touch upon, there's so many battlegrounds between insureds and insurers, and the broker is in the middle of this. So really understanding who your broker is probably the most important. You're not an insurance coverage expert, and you're not expected to be an insurance coverage expert. But what you need to do is make sure that your broker is a cyber coverage expert. And again, there are so many good brokers out there who may have taken care of you for many years. If they don't really understand cybersecurity risk, you probably need to get a different broker who can work with your current broker, but has sophistication around cyber security policies and risks.
And digging into that just a little further, and let's say the broker does present their proposal to you and the package, and then you should absolutely have that package reviewed by a trained attorney that specializes in cyber insurance. And I think that's where maybe another disconnect. From a lawyer's perspective, as a trained, seasoned lawyer, is there a big difference? Does it make sense to have a specialized attorney that just specializes in cyber to review the policy?
Yeah, the simple answer to that is yes, is that because this is so important to your bottom line. If you don't have the resources to, completely have a hardening and understand, what your threats and vulnerabilities are, at least get a policy in place that provides broad coverage that's going to really cover things that are most likely to happen to you. And it is challenging for brokers because they're not that sophisticated. Most of them aren't, and they don't really understand your business as well. So you should have a lawyer who understands this particular area. So a general lawyer isn't going to know that. You may have general lawyers who are experts in contracts, and you may have lawyers that are expert in insurance, and you may have lawyers that are expert in liability. But what you need is someone who is an expert in understanding the cybersecurity risks and understanding insurance policies and how they apply. And that is a bit of a unicorn.
Well, that's why we're bringing you to the table today. So when it comes to cyber insurance, what kind of coverages do you need as and it might be different stages of a business. I mean, if you're a standard accounting firm, a practice, 50, 100 employees, I mean, what are some things that bare bones you should have in place when it comes to cyber insurance?
Well, you have to have first party coverage. So most policies have first party and third party, but I have seen where a broker didn't understand the difference and procured third party coverage only, thinking that that's where the exposure is, because that's typically where it is in a number of other policies. But what's really important is to make sure that you have first party coverage. Make sure you have coverage for ransomware payments. Make sure you have coverage for ransomware negotiation. You can't negotiate yourself. Your lawyers can't negotiate. You have to get specialized negotiators who do this day in and day out, because you have to be very careful about who you're negotiating with, and you don't want to get crosswise with the U.S. government on engaging with nation state actors. And that's one of the things that you may not think you need the type of coverage for war and terrorism. But actually, what we're seeing now with these nation state actors, it is an act of terrorism. It can be. And if you don't have coverage for that, your insurance carrier could deny it. So while that seems like completely out of the realm of normalcy for you, it actually has become important now. We are seeing insurance carriers and insurers getting crosswise on that. You need to make sure you have social engineering coverage, because that's where lots of things happen, because someone's gotten into your system or someone's manipulating your employees to click or to send. They click a link that could allow them access. So really making sure you have that, because that then becomes a very broad under social engineering coverage, I should say. There are a number of ways that that plays out. One is certainly wire fraud transfer. One we saw involving CPAs is the threat actor was able to get into the system, scooped a bunch of the tax returns that were getting refunds, and then asked the IRS to redirect those refunds and asked the state to redirect those refunds. And so the only reason that the CPA firm found out about it was because the client called up and said, I thought I was supposed to get a refund on this. Did you process that? And that's when it all came undone, discovered that an employee of a CPA firm had clicked on a link, allowed the threat actors to get into the system, and then stole a number of tax returns and started working to redirect those funds.
And there's a big difference between when you're dealing with an insurance carrier, because I know I've seen this from my own personal business, where A, they will reimburse you for coverage, or B, they will, pay for things up front. If you're a cash tight company, like a lot of companies are in the United States, unfortunately, let's talk about the ransom, for example. If they're demanding $500,000 or $1 million ransom, is that firm going to be expected to spend that money up front and then possibly get reimbursed by their carrier? Or B, is the carrier going to jump in and take the quarterback and actually submit the money, hoping that the client gets the data back? Have you seen that situation? Has that been also a challenge for companies?
Yeah, I think that's a really good point. There are two types of policies. There's the reimbursement policy, which is exactly that. So if under a reimbursement policy, what the insurance carrier is agreeing to do is reimburse you once you've incurred the expenses. Mm-hmm. And that is absolutely, Chris, a really critical point. Those policies can cripple you because in two very tangible ways. One, if you don't have the money, then you can't pay the ransom. And if you can't pay the ransom, then your operation is fully disrupted, and then you're stuck. And yes, you can try to negotiate with the insurance company. And, we've had some success in doing that where it's been a reimbursement and they can't afford to pay for that and claim they didn't understand it. And so the insurance carrier on occasion has been willing to say, all right, this is a small insured. The broker didn't explain that, or we're going to have to pay it anyway. So yes, let's front it, but that's rare. So if you have a reimbursement policy, you need to make sure you have an understanding that that's what it is. And you should have some type of credit line or some type of quick loan option available so that you can make those payments and then get reimbursement. I mean, the reimbursement process is relatively quick. I mean, it's a 30 to 60 day. So a credit line can be of use and a way to do that. But again, that's, you may need that credit line for other reasons if your operations are shut down.
What are some of the things that you must, as an organization, a business in the United States here, must have in place to remain in compliant to have cyber insurance? I mean, what are businesses are expected? Are you seeing a shift in the insurance carriers demanding that the companies do certain things? Because, we've all seen the form that comes from the carrier. It's a one pager. It's a bunch of yes, no's, and you send that back. One, how important is that piece of paper, especially if you're not 100% transparent? And two, what are some of the things that you should be doing to be compliant with the insurance carrier?
So there's really two types of insurance carriers, and we're talking about the application. So in the application, the type of insurance carrier, the traditional cyber insurance carrier sends out an application that you have to fill out all those yes and no's. And just, historically, it was a very comprehensive, complex with all the technical controls. You had to represent that you had all these and more, that you had all these technical controls in place. That shifted over time to a much shorter, even one carrier went to 4 questions that they determined was going to be the defining questions for them to understand the risk and predict risk. And they were wrong. So they got hammered. So what we're seeing now is that the traditional insurance carriers, their application forms, again, are getting more and more complex, requiring you to represent and warrant that you have all these technical controls in place, that you have administrative controls in place. And what I mean by administrative controls that's people and processes. So you have to sign all the yes and no's on that. And what's very important to understand is that application where you're making representation and warranties becomes part of the insurance policy. Every cyber insurance policy I've seen specifies that this application is a material to the issuance of the policy and material to the coverages afforded under that policy. And if you misrepresent your technical controls or administrative controls, and there is a cyber security incident that arises out of a violation of one of those, you may not have coverage at all. So those applications are very, very important. And it's always better to be truthful than to fudge at all. You don't want to do that because you could lose your coverage. And that's one. That's the traditional insurance coverage. There are now companies who will require that you give access to your system, and they will scan your system and they will look for the vulnerabilities, and they will tell you where your vulnerabilities are and ask you to correct them. And at some point, if you correct them, then they'll issue a policy. And what we see those policies, the premium is less than the traditional coverages. But what happens is that sounds great. And I mean substantially quite a bit less. But what happens then is you're obligating yourself to allow them to scan your system throughout the policy period. And if they find additional vulnerabilities, you have to correct them. Well, that can become very costly. So the question you need to be asking yourself with insurance coverages is, do I want the traditional where I'm going to pay more in premium up front, but I'm not being asked to improve my system? Or do I want to pay a lower premium and then understand that as time goes by and as they're scanning my system, I may have to invest money into additional hardware, software, firewalls, whatever it is that they require you to improve the cybersecurity of your system.
So bottom line, one, make sure you understand what you're signing and the questions they're being asked. Two, be truthful and honest, because they're going to find out one way or another, especially if you go through a cyber attack. They're going to do the forensics anyway, so they're going to find out one way or the other. And three, well, I look at the scan from the insurance carriers as a free security audit. You can either A, pay somebody to come do a security audit, or B, you can get a free one with your insurance carrier. I mean, and at the end of the day, it's only going to benefit you as the business to be more secure so that it minimizes the potential of a cyber attack.
Right. And I mean, we've gone with that. So plan B for us, because I'd much rather invest money into hardening my system than a premium that I may never use. And so I have gone with plan B, and they have come up with some vulnerabilities that I need to correct. I was grateful for that, because I don't want to be in that position where I'm shut down either.
Yeah, no, absolutely. How do you successfully transfer risk to an insurance carrier?
Well, I don't know that you successfully transfer risk to an insurance carrier. I think what you're doing with an insurance carrier is reducing your risk by purchasing the coverages that you need. So it's really not transferring risk. It's protecting you. You're making some risk assumptions. I'm going to assume these risks, and they're going to cover these risks. And so you need to make sure you understand what risks are you assuming.
Yeah.
And so that's again, that just gets back to understanding the coverages that you're procuring. To the extent you don't get coverages, you're assuming that risk. I think the question though is, how do you transfer risk to your broker? And I think it's important that you really understand and work well with your broker. Your broker is your advocate. So when there is a cybersecurity risk or incident, your broker is your advocate, especially if they're sophisticated. They're going to be really good at it. But what you also want to understand is your broker is also trying to make sure they're not absorbing or assuming any risk. So what you typically get with any type of insurance policy is you'll get the cover letter that says, please review the entire policy. And if you have any questions or you don't understand the policy, please let us know. Then the cover letter will typically have some boilerplate language that says, by accepting this policy, as is, you understand that the broker is not responsible for any future risk, something to that effect. What's important about that is if you get a lawyer then to go look at it for you, best. But to the extent you choose not to do that, the second best thing to do is to write back to your broker and say, thank you for the policy. Your letter says that you're expecting us to read the policy and understand that we are relying on your expertise to advise us about the coverages. We are relying on your expertise to make sure that we procured the proper cybersecurity coverage for our business. So you have that disclaimer back. So should your policy not cover what you believe should have been covered? And should you have had conversations with your broker about what you expected? And this is what I see day in and day out. What I see every time there's a cybersecurity incident where there isn't coverage, what I hear from every single business owner is, I thought I bought coverage for this. Every time.
That is probably by far the most important advice you could possibly give to the industry as a whole right there. That is priceless. I'm sorry about you, as you were saying.
Yeah, I just think it's very important is that you got to recognize that your broker is your advocate, but they're the expert in procuring insurance for your business. Your broker needs to understand your business. Your broker needs to understand your cyber risk, not some generic. They need to understand you and procure policies that protect your business and the risks. And so it's just very important to make sure you have the right broker who spends the time to do that, and to push back on them on those boilerplate letters that go out always.
And this is why I'm thinking about a lot of organizations and a lot of business owners. A lot of them delegate this responsibility of shopping insurances out. And I think this is imperative that business management, business owners really take ownership of this problem, because they know their business probably better than anybody. They also know possibly where the different lines of business you want to get into. So it's imperative that business owners, upper management, get involved in this process. This is something you don't necessarily want to delegate out to somebody that may not be as seasoned as you are of understanding your business and the liabilities. Good stuff. Good stuff. Thank you, Beth, for sharing your experience and your expertise on this important topic. And for those who are still with us, thank you for joining us today. If you would like more tips and best practices from the experts, please like and subscribe and more videos. Cheers.